Well, D.A. Davidson initiating coverage on Meta and Alphabet in a new note this morning. And the analyst saying that he is adding the names to the compute sector coverage. We have the analyst behind that note joining us now, Gil Luria, managing director at D.A. Davidson. Gil, it's always great to see you. I found this note interesting because, as you point out, you unite a bunch of companies that are usually not covered by the same person at shops like yours. And you're putting them under that umbrella of compute. Just briefly, tell us your thinking in putting them all together.
Yeah, these 6 companies are really providing most of these compute capabilities in the market. And especially over the last couple of years, they've taken in almost all the profit growth, which is why they've performed so well. And in the next markets they grow into, which is AI compute and spatial computing, those markets require scale, reach, and capital. So unlike previous waves of technology innovation that came from startups, innovation now is coming from these biggest companies. So these 6 companies will continue to dominate in AI, in spatial computing, and extend their lead from the sectors they're already in, desktop and mobile computing, cloud computing, and advertising computing. They'll keep dominating those, and they'll dominate the next 2 waves.
And interesting, when I think about Meta, and you initiate there, Gil, with a buy, one interesting thing I'd love to get your take on is you clearly saw in this earnings season, big tech investors has kind of renewed skepticism about all this AI investment. It seemed to be this theme of show me the return, show me the ROI. With Meta, though, it seemed to be different, Gil, where analysts seem to believe, listen, all this AI investment is actually showing improved engagement and advertiser ROI. Is that how you're seeing it?
Absolutely, and Meta's not getting the credit for it. They're trading at a below market multiple, while the other components, so Microsoft, Nvidia, Apple, are all trading at above market multiple towards the higher end of their multiple historical ranges based on the notion that they'll win from AI, which they will, where Google and Meta are trading below their traditional multiples, meaning the market's not giving them any credit. Now, we think for Meta, as you point out, AI is already working in their favor. They're better at delivering ads. They're getting higher yields on ads because of AI. So that investment's already working for them. And we point out that they're carving this very important market for open platform AI compute. So while Microsoft, OpenAI, Google Gemini, and Amazon Anthropic are fighting for the ground of having the closed source model that they control, Meta's gone the other way, which is having an open platform that people can use their Llama model, continue to improve it, and to your point, Meta continues to benefit from that. And based on the multiple, they're not getting credit for that.
So while Meta is different than the others with that open source model, it is very similar to the others in that it is spending a lot of money on data center build out on Nvidia effectively. And you call that a sort of wealth transfer of the hyperscalers to Nvidia. Where are we in that cycle, if you will, that flow of investment? And when is it going to stop? What is it going to look like?
What's clear is that they can all win. They can all grow their cash flow at the same time as Nvidia. Either these companies at some point get to a point where they say, we have enough capacity, let's digest it, let's get some good returns on it, and then get back to cash flow and margin growth, or they continue to transfer wealth to Nvidia for the foreseeable future. That's what the stocks seem to imply, that this is going to continue forever, and these companies will be unscathed. We don't think that's likely. We think there's going to be a point, likely next year, maybe the year after that, where all these companies, one after the other, say, we've done this huge build out of data centers, let's digest it, we can stop buying GPUs for a while, or let's use our own GPUs for a little bit longer until we get that ROI.
So, Gil, you initiate Meta with a buy. Not as much love, though, for Alphabet, Gil. There you're on the sidelines. You initiate there with a neutral. How come?
Well, let's contrast what we just said about Meta. So in terms of positioning for the future, Google is going to be in a fight with the other closed source providers for foundation models. They're no longer really competitive for spatial computing. And for them, AI appears to be more of a headwind on their core business. You just had this great conversation with Alexis about what the DOJ wants to do. The DOJ has come out and said, hey, Google has 90% share of search. The search market is changing. We're going to go to Gen AI enhanced search. We don't want them to have that same share of the next generation. So regardless of the quality of the case and whether the DOJ can pursue it successfully, they're making a statement that they don't want Google to have the same share at a time where the market is transitioning and new competition is coming about from your ChatGPT, from your Perplexity, and others that want to take a bigger piece of this search with generative AI incorporated into it.
And finally, Gil, I want to ask you about a company that you're not covering, that you explicitly say you are not covering. You say, well, I'm putting the Magnificent Six in my coverage universe now. But there's one stock that you say is not like the others. And I had to say it made me giggle at the end of your note, summary, where you talk about that. Tesla. Why don't you view Tesla as like these others?
Yeah, more than 90% of Tesla's revenue and profits come from making cars. So they're in the car market. The fact that they have potential for doing other things in the future is great, but that's a venture investment. Right now, they're in the car business. Having said that, the player here isn't Tesla, it's Elon Musk. When I say that Meta has a big lead in terms of pursuing the next open platform foundation AI model, the second in that running is Elon Musk's Grok that he has under XAI. And if he continues to commit his personal resources to building that out, he can be competitive there as well. But that's not Tesla. That's an investment that's actually more part of Twitter and really an Elon Musk investment as opposed to a Tesla investment.
Gil, always love having you on the show. Thanks for joining us.
Thank you.